Hello and welcome to the Paris Fintech Forum Communities Programme. I'm Elliot Gotkin. I'm a journalist and with Laurent Nisri, co-host of this exclusive video interview series produced with the support of Solaris Bank, Rise and BPI France. Now, most stock trading apps make the user experience as easy and as engaging as possible so as to maximize interactions and revenue. At Stash, they deliberately built a bad day trading system to encourage long-term investment. The company's co-founder and president is Ed Robinson, who joins me now. Ed, great to see you.
Great. Thanks for having me, Elliot. I'm looking forward to this.
Me too. So look, I kind of introduced you perhaps simplistically or Stash simplistically as a stock trading app, but there's much more to the company than that. Tell us kind of what sets you apart from the Robin Hoods and eToros of this world and why.
Yeah, sure. So our background at Stash is to try to teach and educate our customers about long-term diversified investing. There's two stats that we always go back to. 80% of Americans live paycheck to paycheck, and 40% of Americans can't come up with $400. The last thing we want to do is encourage day trading, which is incredibly hard to get right over the longer term. But what we want to promote is education advice and customers building long-term correct financial habits.
Right. And also, as you kind of expand into different verticals in the fintech space, inevitably, you start butting up against rivals that perhaps you weren't competing with before, like neobanks, for example. Do you envisage kind of longer term that you will become some kind of bank that offers all sorts of financial services?
Yeah, so we actually have a banking product on Stash. We're actually the world's first platform to offer stockback, where our customers, when they use and spend on their banking account with Stash, actually earn stock in that underlying company. So if they go to McDonald's, they shop at Amazon, when that purchase goes through, as part of our rewards program, you get stock in that underlying company. And we see it as a great way of bridging the gap between that kind of 80% of America living paycheck to paycheck. But as they are spending that paycheck, they're actually building a diversified portfolio and investing in the same time.
Right. But although you have like a kind of banking product, I mean, do you envisage kind of more banking solutions? So the end point would be you would actually be a bank?
Yes, I think one day we're not looking to be a licensed bank right now in the US. We believe that we can offer an incredible product to our customers before we actually have to cross that line over and be regulated as a bank. Currently, we offer no free checking account. You get pay 2 days early. There is rewards. You can bill pay. You can set up partitions. It basically offers all the functionality that you get in a regular banking account, as well as the added features that you get with all of the investing products and education products you get on the Stash platform.
Right. And without the downside, one assumes, of having to hold lots of capital and deal with lots of
Yeah,
regulations.
and pay lots of fees. It's a zero fee banking platform, and that's what we're really excited about. And the adoption's been incredible. Just seeing the amount of customers, and we've opened up around 3.5 million bank accounts since we opened our banking product about 2 years ago, and that growth is continuing to expand.
Okay. And earlier this year, you announced, I think, $125 million fundraise, taking your valuation to just shy of $1.5 billion. What's the money for?
The money is purely for growth. Growth in two aspects. We've really nailed the target market we're going after. The retention of our customers is really, really strong. And so what we want to do is continue to accelerate the acquisition of new customers, one, and also continue to build and improve the product offering that our customers receive.
And when I spoke with your co-founder last year, Brandon, he told me you were close to break even. Is that still the case? And would it be fair to assume that this could be perhaps your last private fundraising round before an IPO?
Yeah, I think yes, we could go. We could become profitable if we wanted to, but we see an incredible opportunity in the US. As I said, we've got around about 2.5 million customers on our platform. America is such a big market, and so we want to continue to aggressively grow our product, our offering, and acquiring more customers. So we're going to continue to kind of keep pushing out the profitability to continue to keep growing our platform.
Right. Now, for those of our audience with an ear for these sort of things, they may have detected a slight Australian twang from you.
Yeah.
You are from Australia. Was it a kind of typical Sydney-sider upbringing?
It was. Went to school in Australia, went to university in Australia, did a couple of years straight out of university in an investment bank called Macquarie. Got transferred to London, did 7 years in London before I was transferred to New York, where I worked with my current co founder at Stash for a couple of years, running global electronic trading for Macquarie. And then this idea came up. We saw what was happening in the market. We saw the democratization of, finance and increasing access to the everyday people. And we said, listen, there's a great opportunity. If we can layer education, advice, and a really solid mission, we can build something really special. And that was about 5.5 years ago.
I mean, how did this idea come about? Was it just a chance conversation? I was just, I remember speaking with Sergio Furio from Creditas, which is a Brazilian secured lending platform, talking about how it was almost like a chance conversation with his partner that kind of gave him the idea for that. How did the idea of Stash come about?
Yeah, so we were on a trading desk. For people on this call that work in finance, I had always, through my whole career, had friends or family saying, "Hey, listen, I've got a little bit of money. What should I do with it?" And then one day we were literally on the desk, and someone that ran the research team came over and said, "Hey, Ed, Brandon, like, what should I be doing with 10 grand? What should I be investing in?" And this like light bulb like just went off. We saw, Acorns, Chime, Betterment, Wealthfront, all of these companies already in the market. And we kind of said, listen, these products are great, but it doesn't solve that underlying issue around education, access, and simplicity. And so we went out onto the street in New York, 55th Street, and asked people that didn't wear suits, asked the FedEx workers, asked Uber drivers, listen, do you invest? 92% of people came back and said, no, I don't invest, but God, I'd love to. And the three reasons why they said they don't invest is one, they don't know where to start. That is not being marketed to by the big incumbent brokerage firms. Two, they need education. They don't know what a dividend is. They don't know what stocks are. They don't know what an EPS or diversification is. So it gets scary, and they say, "Listen, I'll come back. I'll read a book, and I'll do it later," which is obviously a big miss because you lose that appreciation. And the third parties need lots of money. Before Robinhood, you needed before Stash, you actually needed to have $1,000 to invest in Amazon at the time. It's now much higher than that. 80% of America live paycheck to paycheck, and so we decided if we could build a platform where people could sign up in under 2 minutes, we layered heavy amounts of education and advice, and you could start with as little as $5. We could build an incredible platform that could be around for generations.
But you and your co-founder Brandon, you both had good jobs, well-paid jobs. It's quite a leap of faith to
Yeah,
go for something in this way. I mean, did your friends think you were crazy? Did you
of
just
course.
had you been saving up yourself, perhaps from your investments, to kind of give you, a bit of time and a bit of space to not earn any money? How did you approach what is a really major life change?
Yeah, 100%. So I had people telling me I was crazy, friends telling me I'm crazy. Why are you doing this? You're in a great position and you get kind of set for life. But I'm one of those people, and so is Brandon, that we saw this opportunity. I became so obsessed about it. And then I started to think about, well, how do I plan? What's the plan look like? And so before we resigned, we worked out, let's set ourselves up to really run at this idea for a year. Let's have the conversations with my wife. He had to do the same with his wife. Make sure we've got the planning, the numbers set up, and then we really put our heads down and just and really focused. And I think that leap of faith is what it creates an incredible risk reward framework. We got to do the pre-planning, and I've never looked back since. We've got over 300 employees now. We help over 2.2 million customers every month, and I'm just really proud of what the team and what we've achieved over those years, over the last 5 years.
Yeah, amazing. Of course, spousal approval, probably even more
Yes.
important than raising funds. Just
Yeah.
finally, on in terms of you personally, I mean, what have you found to be your biggest challenge since you struck off, not completely on your own, but you and Brandon struck off with Stash?
Yeah, I think the biggest thing is continue to develop the team and bring in, employees that can continue to put their hand up and run with things. This company and a lot of fintechs are in hyper scaling modes, and you've got to continue to keep investing time and developing the team and bringing new specialities in as you continue to grow. I think about even the early days. We brought in employees that we thought were going to massively level us up. But by the time they actually got started and onboarded, the company had already outpaced their experience level. And so that's a constant challenge that you're always thinking about because we're moving so quickly. And having the right person or having the wrong person in the role can actually set you down a really bad path. And so it's all about continue to develop, continue to learn, continue to bring in the right talent to take us to the future.
Right, of course, talent always vital
Yeah.
to help things get off the ground and to continue to grow. But look, Ed, don't go away because we're going to take a very quick break right now, after which we are going to continue our conversation with Stash co-founder and president, Ed Robinson. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Now, Ed, I've got a few more questions for you. So let's talk a bit more about the kind of investment app space and ecosystem in general. Amid this everything rally that we've seen, a lot of small investors have either made a lot or lost a lot of money, be it on GameStop, SPACs, or crypto. Do you think some kind of regulatory intervention is necessary to quote unquote protect small investors?
I think that the way we think about it is there are different apps for different people. Robinhood's always going to be very focused on trading and getting people to trade on a very regular basis. Our platform, as we talked about prior, is really built for long-term diversification. It's not a trading app. We've got 4 trading windows. We preach diversification long-term and continue to buy and hold. And I think if you layer education over the top of that, the regulators really love that because we're bringing in so much access and we're helping the everyday American start to understand different and smarter financial habits. And so I'm interested to see how things develop. I love the line that we're on, which is really preaching tried and tested long-term habits. But we'll see what happens over the coming years and quarters.
Right. I mean, just on the subject, you mentioned Robinhood. It's very keen to burnish its credentials for kind of democratizing trading and enabling the little guy to do the same things that the big guys do. Is that a good thing, or should they kind of be hanging their heads in shame for enabling unsophisticated investors to trade on margin and options and other stuff that they may not fully understand?
I think the way we think about it is it's around how do we make sure we continue to put guardrails around people so they're stepping into the right products at the right time. And so at Stash, we think about education. We think about, we don't offer margin. We don't offer investments that are short. We don't do real-time trading. For us, we want customers to feel safe. We want our customers to sleep well. We want our customers to feel like they're in control and they're building confidence. They can always go to other platforms and get more aggressive and take on leverage. It's about, for us, staying true to our mission and who our customers are and trying to help them along their journey.
Right. And investment apps, of course, have also benefited from a business perspective from all of this activity, volatility that we've seen over the last, 12, 15 months. And that's kind of reflected in some of their valuations. Do you think that the investors in these companies, I mean, like the VCs, the venture capital companies, have kind of gotten ahead of themselves, and that some of the valuations we're seeing applied to fintechs, including investment apps, are perhaps getting into bubble territory themselves?
No, I don't think so. I think when you think about the US ecosystem, there's 5,500 financial institutions. A lot of them are sitting on incredibly old technology. A lot of them are still very reliant on the branch network, where their costs and the systems just can't sustain development and improvements to their products. I think you've seen companies like ourselves. We're adding north of 5,000 to 6,000 new customers every day. And once those customers actually join our platform, they're not going anywhere. And so as we continue to develop new products, continue to improve the ecosystem that customers use. The retention's only going up. And so VCs are looking in at companies like us and saying, wow, you're growing. There is revenue increasing. The customer satisfaction scores are going up and continue to be really high compared to the incumbents. This is a transition. I think the pandemic has only accelerated that because people don't want to go into branches anymore. And so we're going to continue to see a mass consolidation, especially as more and more smartphones and people feel more comfortable with taking out on digital only providers.
Right. So you expect to see more consolidation among these digital providers and perhaps legacy providers of investment?
Definitely, yes.
Okay. And just very briefly, finally, robo investing doesn't seem to really have taken off. Is that something that you guys are doing or you see as something that can succeed ultimately?
Yeah, I mean, we actually released about a month ago our robo platform. It's called Smart Portfolios. I've been blown away by the success and the adoption of our customers. I think we've added over 200,000 new smart portfolio robo portfolios in that first month. That continues to grow really quickly. We think it's an incredible tool for people that don't know where to start. To get a very diversified portfolio. And then from that, they can use the Stash platform to buy companies that they believe in, care about, or just want to put $5 into. And so we like it. We think it's a feature. We don't think it's a company. And that's why we like where our platform, which is a subscription platform that has multiple different products that customers use, and we meet our customers where they are on their financial journey.
Good to see machines working, symbiotically with humans rather than taking over the world. But look, we've kind of run out of time. I'm afraid. Really fascinating conversation, and really appreciate your insights and sharing your story with us. So I just want to thank Stash co-founder and president Ed Robinson for joining me today.
Great, thanks so much, Elliot. Thank you so much.
Thanks, Ed. Now, look, I'm going to be back again next week with another big name from the world of finance and technology. So we hope that everyone watching will join us again then. In the meantime, you can all keep up to date with all the exclusive interviews and content from the Paris Fintech Forum Communities Program via www.parisfintechforum.com. Hope to see you next time. Take care. Bye-bye.